Test.
Where? Hello everyone, welcome to today's members sharing. Sid and Jiayi, do you want to try and test if your mic is working?
Hello.
Hi.
Hi.
Yeah, I can hear you guys. Shall we get started? I think we have quite a good attendance rate today already.
Okay.
Yeah, okay, sure, let's get started.
Okay. Hi everyone. Today, C and I will be sharing a little bit more about the carbon markets. Next slide, please. So why carbon markets? Currently, the energy transition has been accelerating due to increasing atmospheric carbon dioxide concentration, as well as the increased demand for energy. As you can see over here, the atmospheric carbon dioxide amount and annual emissions actually increased exponentially as it approached the 2000s. And the energy sector accounts for approximately 65% of total global greenhouse gas emissions. Similarly, rising populations and economic growth are increasing demand for energy sectors, and hence providing access to product access for modern energy to the 700 million people who are currently unserved will require much more new power capacity and infrastructure expansion. Hence, in order to meet the goals of the Paris Agreement, energy transition investment has seen a record-breaking $755 billion in 2021. And the Asia-Pacific region was both the largest region for investment and the region with the highest growth at 38% in 2021. Then look a bit on the carbon market landscape. There are two carbon markets, which is the compliance market as well as the voluntary carbon market. For the compliance market, these are the markets for carbon credits created by the need to comply with a particular regulatory act, and these are called carbon allowance, normally formerly known as the cap and trade program, whereby the cap of the greenhouse gas emissions will decline annually to achieve a particular climate policy target of a particular jurisdiction. And the allowances are freely allocated or auctioned to companies which can trade allowance to comply with the cap on their emissions. So companies with low emissions can sell to their extra allowance to companies that are larger emitters. And for the voluntary carbon market, which is less developed as of now, where corporations and individuals volunteer to offset their emissions. So they are not bound by any regulatory requirements. And these are normally generated by projects that avoid, reduce, or remove certain greenhouse gas emissions that's beyond a business usual scenario. So we can see some projects that will generate carbon credits are like reforestation projects, wetland restoration, or even renewable energy projects. And these are normally traded by individuals and companies on the voluntary market. And the majority of projects will follow a particular rule that is established by independent standard bodies such as Verra or Gold Standard, which we'll look more later on. On the next slide, we can look a bit on the breakdown on how these two differs from each other. And we can see from the circle, for compliance markets, they are actually under geographic or industry regulatory regime, and they will define the cap of the issued allowance, and they will then be sold within corporations that are in the trading scheme itself. Some examples are the EU emissions trading scheme and the very recent China ETS. And for the voluntary carbon market, we can see that the start of the project will be from the project developer itself, whereby they come up with a project that will somehow avoid or reduce carbon emissions, and then they will get their carbon credits verified by a particular independent registry, and then they'll be able to sell it freely or trade it freely on the carbon market. Next slide. This is a little comparison on carbon allowance versus a carbon offset. They are very similar, just that the creation portion is different. So carbon allowance are also known as permits because you have to comply with the government's restriction in order to meet their current cap in the system. And for carbon offsets, it will be issued by the registry instead. For both of them, 1 metric ton of carbon dioxide will equal to 1 carbon allowance or 1 carbon credit. So this is an important measurement that we need to look at. And for the allowance year, it will correspond to the year of the emissions that the allowance will be applied towards. And this is similar to the offset, whereby the offset year also corresponds to the year of the reduction or where the avoidance will be achieved. So when the project fully matures. And some of the use cases, as mentioned earlier, are the EU ETS, and for carbon offsets will be voluntary programs whereby companies may want to reach their own net zero goals in their reporting, maybe in their ESG report or sustainability report, and then they will sort to buy carbon credits so that they can somehow say that they are working towards reaching their net zero goals. Next is an example of how the emissions trading scheme works. So, for example, the EU emissions trading scheme, they will have certain industry sectors that are participating. There's the chemical industry, there's also electricity production industry. And over here, we can see the amount of carbon emissions reduced from 2005 to 2020 is around 21%. And from 2020 to 2030, the target is 43%. There's an exponential decrease because the annual threshold for carbon emissions actually decrease as the EU sets the reduction targets lower and lower. So this gives a higher demand for people to buy carbon credits or trade carbon credits because they are most likely to exceed the regulated emissions that they have to comply to. So next slide over here, we can look a bit on how the emission allowance transact with each other. So let's say, for example, a particular industry has a an allowance of 1 metric ton. However, they are emitting 3 metric tons. So over here, they have exceeded by 2 metric tons. So they have to go and trade or auction with another company that has the extra 2 metric ton because they have under polluted per se. So it is a bit of a direct transaction like this, except for every year, the quota gets lower and lower. So the possibility of you exceeding the emission target is quite high. And that's why the trading scheme still works. So on the next slide, we look at the voluntary carbon market. So over here, we look at a particular registry. This is Vera. Another popular registry is Gold Standard. So over here, we can see a Guiyang afforestation project, which is registered with Vera with the ID of 3433. So every project, they will have a specific ID, and they will talk about what kind of project this is. So for this is an agricultural, forestry, and other land use project, and it is a emission removal project. So over here, you can see that this particular project will generate an estimated 120,000 metric tons. So about 120,000 credits will be generated from this particular project. And over here, we can look at the project validator, which is the project developer per se, will be the Shenzhen CTI. So this is quite interesting because you can go on the website itself and look at the current projects that will vary across industries, as well as the type of project itself and how much emissions they are reducing. So this is how the voluntary carbon market look like. So this is some numbers that we can look at for the compliance carbon market and much more developed. So it's around US 100 billion in market value. And the current ETS trading scheme is actually looking at a very stable price increase in the last 5 years, and mostly already investable in some markets. However, for the voluntary carbon market, we can see a market value that is much smaller, and the price is still very much driven by fluctuations in the supply and the demand, and it's still not yet investable as an asset class, but we can see its potential outgrow the market value of CCM because, as we all know, Carbon Impact Exchange is one of the developing carbon exchanges based in Singapore that is backed by Temasek. And this shows that there's a lot of potential in the voluntary carbon market as we get more access to trading carbon credits in the market. And next slide, please. For over here, we can see the current trend. There are around 30 compliance carbon markets that's operating around the world. And together, these markets will reach a value of almost over 850 billion in 2021. And in the voluntary carbon market, we can also see a supply-demand balance shift really quickly because there are many groups like Science-Based Targets Initiative, SBTI, that are pushing for use of only removal offsets to achieve net zero emissions. So right now, there are even a more stringent criteria on corporates who want to offset their carbon emissions, whereby they can only use removal offsets. So this raises the I guess problem, or raises the issue of offering of quality offsets, which will eventually affect the price, which I'll elaborate in the next slide. Sorry, see next slide, please. Yeah, because the supply of the next slide. Yeah, the supply of the high quality credits is stretched because it's subjected to many constraints, such as your geopolitics of the climate commitments, the source of the projects, and whether there's additionality or double counting. These are some of the quality criteria that are coming to. So now not any project can be certified as a carbon credit anymore, and this makes the supply more stretched. And there's also rising demand for credits amongst various industry. As we all know, many corporates have their short-term neutrality commitments where they have to comply with. And also for the aviation industry, there's also the precedence of CORSIA, whereby more airlines are looking towards buying carbon offsets so that they can reach their emission goals, as well as the marine, whereby they have adopted the first set of international mandatory measures for greenhouse gas emissions. So we can see from the tiny graph over here, there's a very big increase in the number of companies, corporates, industry that have to accelerate their net zero commitments. So this kind of scarcity kind of drive up prices in the future, whereby the global average carbon credit prices in the voluntary market actually moved from around $2.49 per carbon per ton, per metric ton, sorry, to an increase to about 3.82. So we can see that the increase will continue to the prices will continue to increase as this scarcity kind of gets perpetuated in the market. Next slide, please. Okay, we'll talk a little bit about the carbon credit life cycle. So these are the 5 stages whereby investors or stakeholders can come in and invest or see how they can contribute to the particular stage. So this will help determine the type, the price, as well as the risk of carbon credits available in a particular purchase. Next slide. In the development stage, whereby a new offset type is being developed, the current most popular would be reforestation projects as well as wind energy projects. And the ultimate goal is to have a removal of carbon dioxide and then make the carbon dioxide emission removal a usable product. So this stage is particularly for companies that can make use of possible co-benefits but do not need to use the carbon offsets, because they most likely just want to be supporting such projects. So they want to be advocates of a certain afforestation projects, then they will contribute in terms of the funding of the development of such projects, but they themselves do not need the carbon offset project. That's why they will come in at the development stage. In the next slide, we look at the part where a set of rules is being selected, detailing what the project developer must do to establish a certain baseline for the project. So this will also include the calculation and estimation of the project emission reductions. So this stage is mostly for companies that have a lot of time before they need the offset. So they already know that they want to achieve a certain number of offsets from these projects, and they will come in to build relationships with the project developer so as to see through the whole project life cycle and then sell the carbon credits at the end or use it for themselves. So these are for companies who are interested but don't have a restriction on when they need the carbon credits per se. For the next stage, I will pass on to C. We'll continue.
Thanks, Jia. The next stage is project planning. So the previous stage was coming up with a general set of guidelines for how a project will work, how this particular project will work. So in the next stage, planning is using those methodology, the guidelines that you came up with, you start planning a specific project. So this is the planning stage. And in this stage, you will assess the feasibility of your project as well, because you've gone down into the specifics, the environmental impact, the risks and everything. You come up with a document. And at this stage, third parties will come in as well to verify your project. And your program will start officially being registered. So this stage has 2 options for investments for people who want to get into this project. The first one is a right to percentage of offsets from this project, and the second one is a right to number of offsets. So how you decide between the 2 is based on how much in-depth knowledge you have in this area. So if you have more knowledge, then you can pick the first option. The next stage is the implementation. So this is when you actually start doing the project based on the planning and the methodology that you've come up with. And throughout this stage, you have to constantly monitor the methodology and plan. There will be constant verifications and audits during this stage, probably around once a year. And the offsets that have been verified will be deposited into the developer's account. So this is when he actually starts to get money. So this is where the project actually goes from readiness to getting paid for performing on the carbon credits. And developers can start delivering to investors as well. And the final stage is the transfer to purchaser and retirement of the offset itself. So at this stage, there will be still some carbon credits that are not sold yet. So these can be bought directly by consumers such as you and I and corporations as well. This stage is actually probably the safest and the quickest stage to invest in because it avoids the transaction cost, but also higher quality risk because you're only coming in at the last stage. So you're not fully first party aware of the remaining stages. So you don't know exactly what happened to reach this stage. But to facilitate the easy purchase of offsets in this stage, there's 3 parties involved. There are brokers, there are exchanges, and retailers as well. Next, what's the point of having carbon markets? Overview. So historically, it's quite difficult to provide for public goods, as we've learned in economics, because A profitable business model can't be built on things like preserving forests or on building trees, as these are public goods, and usually you need taxpayers' money to function these things. So this means that the incentive to profit, the incentive to innovate properly isn't there. But with carbon markets, it puts a price on the externality on carbon, and the price is quite accurate, as close to real as possible. So this mechanism where the companies that work in such areas, it's quite good for them because you can monetize the benefits of storing the carbon and capturing carbon, for example. So now carbon credits get traded in the market, and it incentivizes private investors to allocate funds to the right reasons as well, which is saving the earth. So carbon markets, after everything we've explained, there's a lot of confusion as well, because in terms of clarity and integrity, because this is quite even with all the accounting being done, it's quite a not so transparent area yet. It's still developing. So these are some measures that have come up recently. This measure came up in 2020, the Voluntary Carbon Markets Integrity Initiative. This was to help the companies that are buying carbon credits to be more transparent to their stakeholders. So this is a claims hierarchy with 3 levels: gold, silver, and bronze. And based on the Greenhouse Gas Protocol, which is a protocol for global corporate companies to measure their carbon emissions, it allocates the gold level, silver level, and bronze level. And companies can put this on their website or in places where stakeholders and consumers can see it. So the Greenhouse Gas Protocol has 3 scopes, and it's quite simple to divide into the 3. The first one is direct emissions by the company itself. Second one is indirect emissions from purchased energy that the company uses. And the third one is all indirect emissions that's not included in scope 2. So throughout the value chain of the reporting company, which could be like maybe taking a plane to another country to do work. So to achieve goal level, a company must be on track to achieve its next interim targets for all 3 scopes through emissions reduction within the value chain, and covered all remaining unabated emissions as well. So the next one, why companies are actually going into carbon credits. The first is stakeholder pressure, which is probably the biggest reason. Sustainability is becoming increasingly more important in consumers' purchasing decisions. And a few statistics to put some numbers to the claim. 55% of consumers have chosen to buy brands which are more environmentally sustainable, and 32% actually say that they'll pay more if the brand shows that it reduces its carbon footprint. And 85% of people actually change their behavior over the last 5 years, showing that this is quite important for companies. And this pressure is not just from consumers. Investors are also increasingly pursuing climate change related agendas, as we've seen in our ESG program, because this leads to better investment outcomes, as we believe, and also aligns with our stakeholder beliefs. So overall, stakeholders see themselves as agents of change, and for the companies itself, this means a challenge, but also possibly an opportunity. But why is the business the most responsible to bring about this change? We've heard of all the effects of global warming everywhere and how it increasingly negatively impacts our lifestyle. This change is mostly because of industrialization, human activities such as burning fossil fuels and producing cement and everything. And these are mostly driven by companies. So businesses are best positioned to impact the greatest amount of change in carbon emissions globally. What's the current outlook for companies at the moment? As we've explained, there's a growing pressure to reduce carbon emissions and adopt sustainability plans, even among competitors, because many large corporations like Amazon, IBM, Microsoft, and Unilever have set many ambitious goals to achieve net zero carbon emissions over the next 20 to 30 years. Just to reiterate, net zero means balancing greenhouse gas emissions produced and removed from the atmosphere to achieve net zero. So it doesn't mean that no more emissions can be produced, but rather any more emissions that you produce are offset against carbon credits. So this means that quick action is needed, not just to literally save the world, but also keep up with competition and achieve business goals. And also keeping up with regulatory standard, which is what carbon allowances is not sufficient anymore. How would companies deal with these stakeholder pressures without carbon markets? So traditionally, there's always been the effort to reduce carbon emissions. The two main methods to do this would be switching to lower carbon alternatives and also renewable energy sources. And the second method would be improving the efficiency of current systems that the companies are using. And of course, there's many benefits to this, from increasing innovation, reducing operating costs, reducing regulatory risks, and responding to stakeholder interests. But both these methods involve large transition costs and a degree of uncertainty as well. The first option, switching to lower carbon and renewable energies, actually involves a large amount of upfront infrastructure expenses, as you have to change the machinery and the whole supply chain system. And there's a lower efficiency compared to traditional solutions as well, usually. And the second option, improving efficiency of current systems, there's a large amount of R&D costs involved because the method to improve the efficiency does not come overnight. And there's no guarantee of success as well. You need to keep trying. And overall, switching and improving both takes a lot of time and eventually might not even lead to the emissions completely being done away with. So this is why companies actually need carbon credits. But despite this, there's some concerns involved in carbon credits. So we're going to be transparent about that since we're talking about transparency. And the first thing that we want to go through is the difficulty of understanding the impact of carbon credits. So one example is that we saw that 85% of carbon offset projects under the UN's Clean Development Mechanism actually failed to reduce emissions. So the promised impact is actually not delivered sometimes. This means that there needs to be an increased amount of oversight and regulation. The next thing is that it's very hard to quantify the localized impact as well. Another example is 75% of offsets purchased in the California cap and trade system was actually for projects out of the state. So the people in California actually did not experience the effect of these offsets. And thus the damages done in California itself is not actually addressed. So this is another concern. And the third one that we wanted to highlight was the distorted climate action. So carbon offsets are usually greatly publicized by companies in their marketing campaigns, but the real impact remains unclear. One example of this was the British Petroleum, which is a major player in the California's cap and trade system. But at the same time, they spent over $15 million to $50 million to control climate policies in the state, which sounds quite contrary and goes against the efforts that they've been putting in the cap and trade system. And another point that we wanted to raise was that the current solutions in the carbon credits market is still quite a quick fix measure, because to offset, let's look at an example. To offset carbon emissions from aviation in the US, the whole of the United States would need to be planted with trees, which is a lot of area and really not feasible. So the existing scale of projects is quite insufficient. And what this means is that new investments need to be channeled to new types of offset projects to better combat the issue. Some examples of projects that are in the works but not completed yet is things like genetically engineered plankton to capture carbon dioxide in the ocean, and flooding deserts to create man-made oases that phytoplankton can inhabit. So next, we're going to go through the potential opportunities in the future for the market. So one good thing is that the markets are constantly evolving, and the carbon markets are actually unlike the traditional markets, with a variety of market mechanisms in play here. Some examples are the open auction and the being simply allotted a certain number of carbon credits to trade. And it's actually a good thing that there's so many variety, because over time, gradual shifts will be made towards the more efficient mode, and the carbon markets will be better for it as a whole. So one example is the largest, the ETS that Jia went through just now. It's quite different from what it was 10 years ago because it has been increasingly becoming more efficient. The example is the Market Stability Reserve, which was introduced recently to more directly control the amount of excess supply or short supply in the market of carbon, and allow a more direct lever to influence the trajectory of carbon prices. This was quite effective in inducing corporate action, because before this, carbon prices were just simply too low and didn't really affect corporates very much. So this helped in making it more significant. And another thing is the gradual shift, not just towards efficiency, but towards increased coverage as well. Over time, we are seeing an increasingly increased percentage of the economy's total emissions being covered. One example is China, which started with just the power generation sector, but has made explicit plans to expand to chemicals and steel as well. So the next is the impact of one technology that we've heard about a lot recently, blockchain in carbon markets. So here are some benefits that we found blockchain introduces to the carbon markets. The first is more effective tracking. Participants have very easy and unrestricted access to records because, as you know, blockchain records are quite public, and it's effective tracing of the carbon credits complete journey from purchase to retirement, which negates some of the shortcomings that we discussed just now. Next, it reduces the company's ability to greenwash, so increases transparency, increases consumer trust. And this transparency leads to more expanded and accessible markets. Finally, most importantly, it eradicates double counting, which is the case where two different companies claim the same carbon reduction from the same project. Another important thing is that it increases the efficiency and speed as well, because blockchain in the markets prevents monopoly by eliminating the need for middlemen and reduces the time needed for clearance, trade approval, and other market processes, which leads to the funds being put to better use in the actual reason that the carbon markets were created in the first place. So here are two examples that we thought were interesting of blockchain in the carbon markets that have actually been deployed. The first one is the IBM and Veridium collaboration. They developed digital tokens to facilitate trading of carbon credits between companies on the open market. The second one is a little bit more interesting and relatable. It's between Ben and Jerry and Poseidon Foundation. So they broke the carbon markets down into microtransactions, and they attached the carbon credit scheme to every single scoop of ice cream. So consumers could actually understand the carbon impact of every ice cream that they were buying. And they had the opportunity to contribute more as well, as they were given the chance to double the amount of carbon credit paid for each cup of scoop, or depends on if you want to buy a cup or scoop, but for each cup of ice cream. And the last point that we wanted to share was actually consumers have access to the carbon markets as well. The Poseidon Foundation actually created a app which is still partially in development called EcoPrint. So you can look out for this app. The first step is they let you identify your environmental impact after you put in all your details, and your impact is evaluated, and Poseidon suggests projects based on your lifestyle and things that you'll be interested in. So you can look through carbon projects that you might be interested in if you're interested in these kind of things. You can take action and contribute to these projects as well to make a sustainable impact, and you can share your journey with your friends and family to make them save the world as well. And over time, you can trace your impact and keep track of what you're doing. Thank you. I'm done. Are there any questions?
Yeah, thank you so much for the sharing. It was super interesting. Anyone of you have any questions for them? Yeah, actually, maybe I could start off with a question. So I'm really quite interested in how international carbon credit markets are. So for instance, for this app, right, is it like anyone in the world can use, or is it just Singapore? And one concern that I have about this is like, for instance, I realize that a lot of the carbon credit projects, right, are usually in like developing countries, right? Then in that case, isn't it kind of like a mechanism where like, developed countries, we can continue to, use as much emissions as we want, and then we just like use the developing countries to kind of like reduce our environmental impact? Like, isn't there still like an inequality there? So I could start off with that question first, and then if anyone else you have any questions, feel free to raise your hand. Yeah, thank you.
Regarding the app, I have found out that it is not on the App Store yet, so I think it is still under development. But don't worry, it will be out soon. And regarding the second part of the question, I think you raise a valid point about maybe people in more developed countries being more okay with increasing their carbon emissions because they can just pay it off in a less developed country. But at the moment, that's how the carbon market works, because overall it makes economic sense to do that. But over time, I think we have to find like, better measures to deal with this. Do you have anything to add, Xiayi?
Yeah, I agree with what Sid mentioned. I think it's a very good question from Berlin because when I was working at my current internship, I also brought up this question, and my manager wasn't able to answer me as well because uh it's kind of how the market still continues to make money because they see a supply of such for example, in the less developed countries, there is space to do so, and they have the resources to do so in terms of building renewables. Currently in India, I think solar energy is very popular over there just because they have the space and also they have the resources in terms of the lower labor cost. And us in more developed countries, all we can do is to provide funding and provide better advice or consultation to such places in developed countries. Not say that the developed countries continue to emit or worsen the environment, because in order for them to develop such projects, they must already have the mindset that they are working towards net zero, which is essentially to balance out the amount of carbon they are able to reduce from the environment and the amount of carbon they are producing in the environment. So by supporting such causes in terms of renewable energy, I feel is a starting step, at least for developed countries to contribute and reducing carbon emissions in general. Thanks for the question.
And I
That
think
is a very
I
good
think
question.
to add on, if I think the why they made it this way is like they look at a global perspective. So you shouldn't think about maybe this country and that country at first, because in terms of the markets, the world as a whole is getting better. And I think over time the gap will be reduced, so the problems like these will be eliminated.
Yeah, I understand also that we're looking at a global perspective. Yeah, but I was just curious about like the whole underlying social aspect, right? Whether there's an inequality. But yeah, thank you so much for answering my question. I know there's no answer for this. Maybe Chen Jia, you're raising your hand, right? Do you want to ask your question?
Yeah, Ken, sorry. Thanks for the sharing, guys. Very insightful. So this app, I'm a bit curious. So if let's say I just sigh like that, right? Then do they know how much I need to pay to offset that kind of carbon? No, I mean, I'm just curious, lah. Is that the kind of app that does that? I know they have like planes, like planes, they start selling like carbon offset, like $2 for flight or something. For like, does that work this way, or how does it? It's just like projects, is it, or like credits?
1 second, let me show you where I found it. You can see my screen.
Yeah.
Oh, so this is where we saw it. And the steps, they were like, you just enter the expenses you have and the things you buy and where you buy it from. And they say that they'll break it down into the carbon footprint. So
Got it.
they supposedly have the data for water, energy, and everything that you buy.
I see.
And then based on your score, they will suggest some project. So you can see the projects here. So they have access to these projects.
I see. Okay, that's quite interesting. Okay. Yeah, okay. I mean, then I have a second question. So I understand maybe not very linked. But I was reading an article on carbon offsets, right? So carbon credits are one way that companies will sort of utilize to make the claim that they are currently net zero, based on their operations. But the idea of a carbon offset is that it's supposed to have this like term of what additionality. So like if you're unable to sort of like offset your carbon emissions based on operations, so you can use this like things like carbon credits. That the idea is that these kind of projects, right, are supposed to provide the additionality. So like in the event like that you would contribute to a project that otherwise wouldn't have been funded for, wouldn't have happened, like this kind of green projects. Like let's say for example a tree that wouldn't have been planted if you didn't contribute to the project in the first place. So that kind of offsets the thing. But a lot of companies tends to invest in projects that are already happening. Like let's say like a preserved portion of a forest that's already preserved, but they just buy it so that they can claim that they sort of are net zero. Is it somewhat similar to what you guys to what carbon credits market is? And is there a solution for that? If they just buy these kind of already preserved places, then they still claim to be carbon neutral, even though it's not that the additional factor in. Does that make sense?
Yes, I understand your question. Because
okay.
the additionality is a quality offset. So
Right,
before
yeah.
they have set a particular let's say benchmark, a lot of these
Mhm.
carbon credits are like you said, right? Some people already
Yeah.
buy something that's already in the market. And I
Yeah.
think now increasing regulations is that you have to prove that your particular carbon credit is verified by either one of the regulatory, which is Vera or Gold Standard, which will make sure that the additionality portion is being considered already. So
I
people who
see.
claim that they
Uh-huh.
bought from this low preserve forest, right? By right,
Yeah.
you cannot claim that it is reducing your carbon credit. I mean,
Because
you are buying that particular carbon credit.
yeah,
So
because it's already gonna be planted, like
correct.
you got the thing right. Okay.
Yeah, it's
But
just
sometimes this
yeah,
sorry,
you
go
say?
ahead. No, I was a
No,
little bit confused because sometimes these portions, okay, I'm so sorry. Sometimes these portions of these guys that are the ones that selling the projects in the first place, right, are the ones sort of like profiting from it because they are just the ones selling it, but they're not exactly, they're not really in line or really care that okay, this might not happen even if it doesn't. It's just a plot of land that they're selling that say, oh hey, you can pay to make sure it doesn't get deforested, even though it already is protected in that sense. Sometimes yeah. So isn't that like a bit of a conflict of interest within this stakeholder point of view?
sorry, are you trying to say that this is the project which is not the additionality one, or
No, okay. No, I mean like sometimes the people that sell that like these exchanges that sell these carbon credits,
Mm.
these projects, they already I mean to them it's just a way of how is it? It's a way of selling or getting a profit, right? Or making something sure that it's positive influence. But let's say to them it's just connecting companies to this sort of plot of land so that they can say that it's carbon neutral, even though it's not always. Even though it's already protected in that sense, it's just giving a title. To them, it's just a title, right? So would you say there's a bit of conflict of interest between the exchanges that are regulating this process itself?
That actually for this, they are slowly coming out with solutions for this. So there's another
Oh,
group of people. They are the other group of people is
okay.
the verifiers. So there's a third party that had to come in and verify this. So
Oh,
it's
okay,
not
okay.
just some people selling something to another people. So there's someone selling something, someone checking that, and someone buying it after getting checked. And also
Okay.
the other solution is this. I think can you see my screen?
Yeah.
Oh yeah, the blockchain that I mentioned just now, it adds to the traceability as well. So it somewhat solves the problem that you were talking about, I think. Like you can over here, you can see
Oh,
the current system. Then over here, additional verification and traceability. And the
got it.
retirement is quite important. Like, and one of the things you're saying is like the company can just claim credit for something that's already there. But
Yeah.
with the blockchain enabled system, once maybe something is claimed, it will be retired. Like once something already exists, so you can't claim credit for the same thing because anyone can check it.
Got it. Okay. Thanks so much, guys. Fantastic. Yeah, learn a lot. Thanks so
Thanks for the
much.
questions.
thank
No
you.
worries.
So just to clarify, right? So like the auditors and verifiers will be like Vera, Gold Standard. Then the party that's like selling the credits will be like sorry, I forgot what y'all said. The carbon impact exchange, the Singapore one, right? Like for instance.
So like the exchanges, yeah. So the exchanges, there's different exchanges, or actually can buy through energy traders also, like commodities traders. So then there are green traders who will
Okay.
buy credits from the exchanges itself and then resell it to their counterparties. So then there's also another market for that, because normally traders very focused on P&L, so they will buy the credits at bulk and then sell it like to their current clients.
Okay. So then it reduces the conflict of interest because they're all different parties. Okay, I understand.
Yeah.
Yeah, thank you. Anyone else have questions?
Does Dean want to share about his ethics project?
Oh, Jingzhe has a question.
Oh, it's interesting.
Yeah, thanks for the good presentation. I think Sid showed one interesting stat that, if I remember correctly, it's like 85% of the voluntary projects fail to reduce emissions or something, right? Any thoughts on like the main reasons like why most of these projects do not like fulfill the requirements like over the entire life cycle?
Probably because of it's the same as the idea in venture capital. Like most of the companies that start fail, it's the same thing because these projects are in a way companies as well. So maybe if you count all the projects that start at number 1, right? It's all experimental and a lot of R&D costs, and you might not actually lead to results. Maybe that's why. So there needs to be some, like, companies cannot just invest in this step and then say that they have, how to say it, they have reduced their carbon emissions. They need to make sure that when they claim they've reduced their carbon emissions, they are only counting the projects that go all the way through.
Yeah, okay, I understand. I try to understand whether it's because there's a funding gap throughout like the life cycle, or is it like the feasibility or
Okay, I need to research
other
that as well.
factors?
I'm not too
Yeah.
sure.
You didn't
Okay,
really went
cool.
go in that direction, but thanks for that. We'll research on it.
Okay,
You can
yeah,
tell us
that's
if you
okay.
find out.
Don't stress.
Okay.
Thanks.
Anyone else have questions? Maybe I'll just ask one final one then. I'm actually quite interested about like career opportunities in the carbon market space. So I saw that Tiffany left some comments. I know that Jia, you previously did like a related internship before. Do you mind sharing a bit more about like the career aspects, opportunities? Yeah, thank you.
Okay, I think maybe I can share a bit more about my internship. I'm interning at NG. It is an energy company, and I'm parked under Green Solutions APAC, which is their green trading desk. So they recently just established this green trading desk around last year when carbon credits got back into the in thing. And because NG, they see through the whole infrastructure from the start. They can develop the solar plant itself all the way till funding, and then all the way till making sure they get registered. So if NG wants to kind of like link up the whole supply chain, but we're more on the front office sales side, where my job mainly is to understand more about the company's products, which is carbon credits, power purchase agreements, renewable energy certificates. So these are the kind of things that we are selling to our counterparties, and our counterparties can be people from various industries, such as the oil and gas industry, which is can be ironic because the oil and gas industry are the one that are the biggest emitters, right, polluters, but a lot of them are looking towards net zero goals. That's why they are seeking to buy carbon credits from partners that they have known or worked with for a long time, in terms of, because they have been trading their oil and gas related derivatives already. So it's easier for us to promote the green products to those people in this company. So we also work with banks such as MUFG as well, to tap on their clients who might want to buy this kind of products. So we also look a little bit about on structuring power purchase agreements, like from finding a plot of land to build the solar power, and then pricing and estimating how much the solar power would cost, and then reselling it, finding a counterparty to buy it. It's kind of complicated because I'm still kind of learning how this power purchase agreement work as well, because there's a virtual aspect and there's also a physical aspect, which is another topic to like dive deeper into as well. So it's quite fun so far, but it's quite scary because you always see the price fluctuating, and I guess when they ask me to like look at the price, generate some insights, I'll still be quite scared, like to not say the right things and to interpret wrongly as well. Yeah, so I guess that's one career aspect to consider if you are interested in commodities, and then particularly want to go into green products. Yeah.
I can share a bit more on what I got from my Jakarta trip as well, because I just went to Jakarta like 3 weeks ago, and then one of the startup companies that we visited is called Fair Atmos. Essentially, they are a carbon credit exchange, but they focus on mangrove in Indonesia. So Indonesia is like one of the countries that has a lot of agriculture, so they have a lot of supply of carbon credit. And then there are a lot of demands for it right now. So she's one of the, I think, first people to actually start this exchange in Indonesia. But because it's such a nascent market, so they are facing a lot of issue in verifying like the carbon credits. So they need people who actually are able to audit these projects. And based on what she told me, each project it takes about 1 to 1.5 years to audit. So it's a very long process, but they cannot find enough talent to hire in Southeast Asia. So yeah, so it's just a career option for everyone here. I think there's quite a strong demand for this kind of talent because currently the shortage is really, really high. Yeah.
Yeah, so for NG Impact, right? Like, do you all have to work with like Vera and Gold Standard, all that, or like you guys are like all in one? So you guys do the verifying, the sourcing of the projects, and then the sales side as well.
No, so we verify the projects on, so the projects have to be registered with Vera or Gold Standard already, mostly from the project developer. Or if we are the one who originated the project, then we will guide the registering with these two organizations and then make sure that these are tradable credits. And then there's when like the next step goes, which is they will be listed on the exchange and then we are able to trade on the exchange. Yeah.
Okay, I understand. Thank you so much. Very interesting. I want to consider a career in this area.
Yeah. It's quite
sounds more
interesting.
meaningful also. Yeah. Any final questions? Last call. No one. Okay. Sid and Jia, I think Offer had a question in the chat, but he had to leave earlier. Do you all mind just answering him on WeCom?
Okay.
Yeah, then do you all both mind sharing your slides on WeCom as well? Under both VIP and EIP, just in the all group chat. Yeah. Thank you so much. It was a very interesting topic. I was particularly interested in carbon markets because I researched on it previously. Yeah, then I was very confused. Yeah. So thank you so much for the sharing. Bye-bye.
Thank
Take care.
you.
Good night, everyone. Have a good
Have a
weekend.
good weekend.
See you all next week.
Bye.